Good morning from Chicago traders. It's 8:02 a.m. Chicago time on Monday, the 12th of April, 2021. Thanks for joining me on episode 1970. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Hope you had a great weekend. Hopefully you're hearing me nice and clear. Let's hop right into the convergent pre-market summary sheet this morning. A slight risk off as we see the indices pulling back and now rallying back up a little bit as a result, mainly being driven by the surge of coronavirus cases across Europe. There's some shutdowns going on also in Canada. Shutdowns in the province of Ontario and so on, as well as the discovery that the Chinese vaccine really isn't as effective as initially expected. So the market's pulling back a little bit. Overall, silver is the laggard today, down 12 cents, trading at 25.20 and a half. Or 0.47%. Gold is also off. Gold's holding 1739.80 this morning, down $5. The S&P is off just slightly. The S&P is off only 3 points. The Nasdaq's starting to push a little bit higher here, but still trading within a range, pretty tight range for the Nasdaq this morning. The NQ is down 21.5 points versus Friday's settlement, or down 0.16%. The lead today is by a crude oil, which is up $1.12 or 1.9%. Crude just pushing higher, pushing above where we were on Friday. Overall, breaking out of a three-day range. That's a beautiful range in crude, with a high at 59.98.60, and it's pushing through now by about 45 cents. So that's where we stand. The DAX is up slightly, 27 points or 0.18%. The bonds are unchanged, and the 10-year notes are down 2 big ticks. So that's where we stand this morning. Still, the market's paying attention to this infrastructure bill. The Congress comes back, U.S. Congress comes back from spring break today, and the goal is to have a bipartisan bill, but President Biden may have to, again, sidestep the Republicans to get this pushed through. Today at 1 p.m., expecting a 10-year note auction. Fed's Rosengren at 1 p.m. as well, and a monthly budget statement. In addition to that, today we start to kick off the we're starting to prepare for earnings season yet again for Q1. So that's something that's likely to drive us a little bit. We'll start posting the key earnings coming out. So let's hop right into what was expected on Friday. This is from Friday's video. Of course, anybody has access to this who goes to my YouTube channel. Friday, we were opening in range of Thursday on the lower end of Friday's overnight range, and the expectation is that there would likely be a battle between 90 and 92, expecting the market to grind through that and to push through 4,100 again, and then I didn't see where it would go, but the expectation is it would hit the first measured move up, which is 4106 as a key target. Otherwise, if it fails to push through the 90.92, the expectation is it would fall through and take out the low from the prior session around 71.50, push into 67.75, which did not happen. Here's what actually happened on Friday. Here we are in our review segment. So on Friday, pretty relatively tight session, but these sessions have been pretty tight, and that's the case always with a market that's grinding up on low volatility. You get fewer rotations, which means fewer opportunities to make money, fewer opportunities to take on risk. But overall, Thursday was pretty tight, very low volume, and then Friday also came in pretty tight. Volume was running about 40% below the expected or the common amount, the common quantity. Friday sat sideways, pushed to 4104 finally, and then broke out above 4104, put in some single prints at 4104 quarter, and then it just spiked to 4121.50 before pulling back a little bit. New all-time highs on Friday. I was not here for this, but note as this thing ran up about 20 points, again, the delta is just not there. This is like really starting to be more extended than what we expect. We often find divergence between the delta and price, but what we're seeing here is extraordinary. We've seen a lot of rallies that just grind their way up. We saw that in right after the election of 2016 into 2017. We saw it through parts of 2018 and so on. But, we do get some play on the delta. And here, delta just doesn't participate at all on the buy side. So, the sell-off off of this is going to be very, very, very interesting, in my opinion, whenever that happens. So here we are. We still have a gap on the week. The prior week was Good Friday, so Thursday to Monday gap at 40.37.50, 40.38's been a target all week last week that we could not attain, just could not turn around and come back. Notice the very, very sharp kurtosis and very sharp volume concentration around that 40.67.75. This is the key price to test on any rotation down. That becomes the biggest target, and so we want to keep that in mind. And then beneath it, 40.38, and then beneath that, 40.14.50 fills the gap zone, the external gap. So we closed on new highs, pretty strong week. The weekly range is about the same as it was the week before. The week before, the weekly range was around 81 points. Last week was about 84, 85 points, something like that. The weekly ranges have been collapsing. We're still one time framing up on the weekly. So since the bottom, we put in a 37.10, which is over 300 points ago, 400 points ago. At the bottom, we put in a 37.10. We've been one time framing up on the weekly. We're one time framing up on the daily. It's really, really strong. The market's really, really strong right now. So again, we're making new all-time highs on negative delta, and you can see the volume. These bars represent the daily volume, and you can see the volume has been falling off. The range, the daily range, has been increasing with this run up, but this is all just driven by fundamental or monetary considerations, let's call it that. Coming into today's session, we open up, we test higher, and then we break lower. We did get back down almost to the single print. That was the launching point on Friday. 4104 quarter blasts off. Here's the market profile chart. You can see that it blasted off right in here, 4104, and then the overnight session essentially went to 4104.50, pulled back 4104.50, retesting those single prints, the line of single prints from about 4110 to 4104, which was yesterday afternoon when I was doing my homework. That was the key area to monitor to see how it zips. It might zip down through to 41.04 quarter, and that was taken away overnight. Now we've been grinding up. Still haven't taken out the overnight high, but we're grinding up. We're getting the overnight sell-off and then the grind into the open, and we're likely to tease out a new high, given that Friday was essentially had turned into a trend day up. So expecting a test of 41.2150. It is Monday, expecting lower range, lower volatility. But overall, I got to tell you, this is just the shittiest market type for me, because it's just, you have to, even if you did get long on a pullback or find a break on an inside out trade, which do occur. I see those all the time. I see one that just passed at 41.1350. Even if you do, just like this long of 41.1350, you're sitting here for an hour to get 3 points, and that's the part that's really annoying. You're basically laying out a lot of risk, but you have to kind of sit patiently for the scale out to cover risk and then for any payout. So it's again, not to bash anything or anyone, because there are momentum or swing traders that are doing very well, and I'm sure your stock portfolio is doing great. But for day trading, not the most conducive environment, and that's what I'm addressing. I'm not saying anything bad about the market in general. It's just this grinding up is tough, is a tough play. Anyway, so that's all I've got. Let's jump right into what's expected for today in our planning segment. Here we go. Turn on stock zones, turn on master levels. Boom, boom. So what are we looking for here? All right. So what's expected for today, people? So here we are. We've pushed away. So this profile overnight, it's really fat. It's very bulky, almost boxy. Pretty okay range, 15 points or so. Little on the low side. Volume a little on the light side, but overall, it's a balanced profile that's moving away from this big balance area, right? So it's moving away from its overnight point of control. It's above mid, above VWAP. I'm expecting an open that attempts to pull back, squeezes higher. I'm looking for the 41.18 to go. I'm looking for the 41.21 to go, and then for it to just grind sideways for a lot of the session before we start pushing into the next area I have up, which is 41.31, about 10 points higher than the current all-time high. I have no indications that tell me that the market is primed to sell off or it's done. The market is continuing to advertise prices higher, and it continues to find buyers at higher prices. And so there's, until we put in an excess, until we push to a point where we see sellers come in and just hammer on that bid and rotate down with, one of those 60, 70 point sell-off days, the market has not found any excess. And when the market does not find excess, it continues to advertise higher and higher and higher prices. If a seller can demand a higher price, why would they sell? They can just lift their offer or raise their offer and raise their offer and raise their offer. And so the market moves up on no volume or very little volume at all. And so this is basically what we're seeing here. There's no incentive for sellers to get in. There's no incentive for those who have bought and held to get out. And so we continue to grind higher. So scenario one follows the weekly and the daily one-time framing up. and the continued movement of the point of control higher and higher and higher as we accept higher prices as value. We have not tested the 4,000 from above. We hit this massive millennial figure, and we haven't even checked it yet. So there's a lot of work to be done down below in what I would consider to be weak structure. But why am I going to talk about this if the market is not able to find those sellers and bring us back? Secondary push into 41.18, 41.21, squeeze a little bit, and then look for an impulse down, a selling interest down, and then come back to the open and then squeeze down into the 41.08 overnight point of control and push potentially as far down as this 41.04 again. Close the single prints at 41.04 quarter and hold steady at 4100 before bouncing back up. This second scenario I would love, but also it brings us back to the 4100 and checks to see that we have a firm foundation for buyers to confidently continue to buy, although they're confidently continuing to buy without any checking at all. So those are the two key scenarios. We're opening in range. We're not opening in value. There's no value for Friday. We're opening in the upper distribution of Friday, or the upper range of Friday. So up and away. The delta, volume, and range are expected to be anemic. So this is a good time to be patient. It's a good time not to throw away a couple of weeks worth of returns. This is when you keep your powder dry and just wait for things to really set up, and only jump on your high confidence or high comfort setups, as opposed to ones that are you can kind of get away with. They're setups which you can kind of get away with because you know what? This environment is very, very poor for making mistakes, because the opportunities are not there for you to just jump in onto the next trade and make it all back. It takes a while. So be sure to be selective. Good luck. Have a great week. I'll catch you tomorrow morning.